Welcome to Real Vision. It's Friday, October 30, 2020, just after market close in New York. This is the Real Vision Daily Briefing. I'm Ash Bennington, joined right now by our CEO and co-founder, Raoul Pal.
Happy Friday, Ash.
Happy Friday, Raoul.
This is exciting, actually, because we're doing this as this Real Vision Daily Briefing live on YouTube and everywhere, just to try something new. Yeah. And get people to get engaged in our YouTube channel as well, which, don't forget, if you're watching this on YouTube, make sure you subscribe to it. But it's, the Real Vision Daily Briefing is always a great highlight of my week, this Friday kind of wrap up of what's been going on.
Yeah, I'm miserable the other 23 hours of the day. This is fantastic. And now we've got the additional energy of being live.
Yeah, and here in Cayman, it stopped bloody raining. It's been raining for like 3 weeks, and now it's perfect weather, so I'm happy.
Yeah, winter hit New York today around noon. The temperature just dropped, and it is really cold out.
Yeah, I don't know what that cold thing is. We don't have that here.
Yes, I remember. Raoul, we're doing this live on a day that couldn't be any busier. Lots of activity happening, lots of risk on the table, lots of motion in markets. How are you thinking about this from the broadest context?
Well, look, I've been building a thesis since about March, when I started talking about the unfolding. Now, if people remember, it's a three-phased affair where I thought that into March we would have the liquidation phase, then we'd have something called the hope phase, which tends to happen in all recessionary periods where everyone thinks actually it's going to be okay, the market signals are wrong. And then the hope phase kind of fades away, and you get normally the despair phase, which I've labeled the insolvency phase because of the credit issues and the slowness of the economy to recover. And I've been almost on every daily briefing that I've been appearing on every Friday, I've been flagging, listen, I'm starting to see signs of this. And that's been for maybe a month now, maybe longer, that I've started to see signs of it. We saw the market top out a while ago, and it kind of fell sharply and then rallied back up near the highs, didn't quite make it. And I said, listen, be careful of this. This could be causing a GMI crash pattern. And that's when the markets fall. They almost retrace the previous high, fail, and then take out the low. We haven't taken out the low, but it's looking a little bit dicey out there. But it's part of the thesis because I've been watching the banks and I've been watching anything to do with credit not doing well. Now, last week was an exciting week because crypto was starting to do really well, following the narratives of this space. But this week, we got a lot of signals, really big signals. First to break was oil. Oil just started plummeting this week. And oil really is a function of global demand. So global demand is clearly slow. And why is that? That's because, as I talked about, and again, I've talked about in the last few weeks in the Real Vision Daily Briefing, watch for Europe. They made a mistake with coronavirus in the summer. Everyone went to Spain and France on holiday, and they all came back with coronavirus as a holiday gift.
Yeah.
That has spread like wildfire. Nobody was ready for it. And the governments obviously have been slow to do anything about it. People didn't quite believe that it was happening. And now it's exploding across Europe. I mean, cases globally are now exploding. That European situation, I flagged it last week in the daily briefing. I'm like, be careful, this is going to cause a risk off. And why is that? For me, the issue here is the reaction function of humans. So ignore whether you think government should lock down or not. I understand there's a huge debate about it. It's irrelevant. What you need to follow in markets is what is. What is governments are going to stop, are going to restrict economies because they have to. If they went through lockdown before in Europe, they can't just say, oh, we're not going to do anything now. So that was coming. And we know that with a massive elderly population across the world, the whole baby boom generation, that the likelihood that people stop spending or slow down their spending patterns. The market suddenly took notice this week as they realized that Europe was in deep trouble. So markets that I've been focused on, stuff like the IBEX in Spain, have started falling sharply because I don't know how Spain gets through this. I mean, those of you who know me, I lived in Spain for 10 years. I've had a house there for 20 years. My mother lives in Spain. Spain is in deep, deep trouble now because their banking system is a mess. Their banks have been in free fall, and they've got more coronavirus, huge, and they've already had it. They're already starting into various lockdown procedures and not fast enough. So this is going to continue for a while. And they don't have any fiscal room to do anything about this. I mean, I honestly think the Spaniards and probably the Italians and maybe the French and probably the Germans are going to have to nationalize or do something about their banking system. There's nothing that's resolving this. So that's just part. I mean, I could talk, there's a lot going on, as I said.
Right.
It's spreading all across the markets right now. The other big mover this week was the dollar. The dollar, something I've been saying, I don't believe in the dollar weakness story, not yet. You know, everyone says the blue wave, therefore it's good for the dollar. Oh, it's bad for the dollar because of stimulus. I don't think that's the case. I think there are other factors at play, and economic growth trumps all with the dollar. The dollar has something called the smile. So if the US economy is really weak or the US economy is really strong, the dollar does well. In the middle, it doesn't do so well. But here's a situation where fear will drive people to dollar. Lack of cash flow means that people can't cover their dollar liabilities. And so we're in a bit of a perfect storm right now. And there's no stimulus, which is something I've talked about, you know, week in, week out. There is no stimulus anywhere right now. The central banks, what are they going to do? Cut rates? Well, they're at zero. So rates are going negative. They've gone negative in the UK, which is the new addition to the negative interest rate club. And I still think the US follows, although US bond yields went up this week, which was the big outlier. So, yeah, a hell of a lot going on, Ash.
Yeah, it's difficult to even think about it and frame it out. But as you say, there's so many moving parts in place. You know, I was thinking when you were talking about Europe, limited fiscal space, and obviously a single monetary policy for the entire union.
Yeah, I mean, it's really difficult. So as I said, I don't know how Spain gets out of this. So you've already seen Christine Lagarde talking about, okay, we need to do more. That was another thing that started driving the euro lower. The euro looks like it's forming a GMI crash pattern too. It hasn't quite taken out the low, it came really close. But if you break kind of 116, I think it goes all the way back down to 110 before we even start thinking about it. So, you know, it's very similar to the setup we had when we knew the coronavirus was coming back in February, and I warned people in advance. The same setup is happening now. We've got no stimulus, people aren't ready, governments don't really want to take restrictive actions, they're going to be forced into it. The longer it takes, the faster the virus grows, the more the reaction function is to shut down more. And we've seen France starting to have really big lockdowns again across the whole country. You know, it's a mess, and the US has just lagged.
Yeah.
So we can see it all across the US too.
Yeah, and precisely to that point, 17 states now in the U.S. at all-time highs, 90,000 infections per day. It's 1 per second.
Yes, and you're also seeing the R0 above 1 in every state in America except 1, I think now. Same in Europe. So the R0, just to remind everybody, is the rate at which it spreads. And anything above 1 means it tends to go exponential. And we've got some pretty high rates of spread right now everywhere. So yeah, I'm really concerned about the growth outlook, and it just reiterates my view that the global economy has not recovered. It's not a V shape. It's not really a K shape. Really, the reality is we're going to have an economic overhang almost all the way through 2021. I mean, having been a student of economic cycles my whole life, there's very, very few recessions that last less than 18 months. So why people thought you could have the biggest economic and recession outcome of all of our histories, you know, anybody who's alive has never seen anything like this, and it to all be over in 3 months or 6 months, they're smoking crack.
Yeah, I mean, there was this optimism that said it fell very quickly, it will recover very quickly. But there's so much unknown. There's so much risk still on the table. You know, I'm looking at one of the indexes for me is the fact that when I go up and I check asset prices, I'm also checking the CDC website. That's not a good sign, right? And when you look at that chart of case counts, the daily case count numbers basically have 3 peaks. The first comes in April. The second comes in mid-July. And the final peak is where we are today. And we are at the highest point of the peak today on that third peak, rising consistently.
Yeah, and then you go and look at the charts of Europe, and they look like a classic second wave pattern you saw in the Spanish flu. Again, it's not as deadly. We understand. We've made some progress, but hospital beds are filling up. Death rates are going up. This is no laughing matter. And what you saw was the first peak in Europe, and then this exponential rise. And again, there is an increase in testing. We also understand that.
Absolutely.
But what I'm really interested in here is the reaction function of people. And the more people get it, the more people know somebody who's got it, the more they become evasive, the more they don't want to get their parents concerned by it. And you and I talked about our mothers and, that they're not going to go out. Yeah. They're not. My mum is in Spain. I mean, she's not been out really. Really, she's not been out for 8 months now. And she's still not going to because the virus is back. And she thinks, well, I don't know how old mum is, 76 or something. And she's like, I'm not going to take the risk. And I get it. So her expenditure has collapsed.
I won't list my mother's age because we're live and she'll start calling and screaming at me.
She's about 60, right?
Yeah, 58 is.
58.
Interestingly enough, the one good news piece, if you're looking for a positive story, and we're not trying to be bearish here about the virus, the death rate, if you look at the three peaks that are associated with the rise in case counts, precisely as you point out, some of that's an unmasking effect. We're doing more and better testing more consistently, so we're seeing a rise. The peaks on the mortality rate spike very high in mid to late April. There's another rise in July that coincides with the last peak in case counts. And today we're rolling upward, but we haven't seen anything that looked like what we saw in April or July in terms of mortality rate. That's a good thing. We can't be sort of complacent about it because we know that mortality is obviously a lagging indicator, but a good sign.
Yeah, exactly. But, this is something, again, we talked about in the Real Vision Daily Briefing. And again, to remind all of you on YouTube, just click on that subscribe button to the Real Vision Daily Briefing channel so you can get these updates every week, because I think they're super useful. Sorry, it comes out daily, but right. I'm here every week and it's all about me. But yes, I mean, I've been explaining to people is, again, yes, this is all good. The hospitalization rate's lower, the death rate's lower. But it's the economic data that really matters for us in financial markets, to our businesses, our own personal economy. That's what we need to look at. So it's, again, like when you go through this election, you have to learn in finance to leave your biases behind. Nobody cares what your politics are. What you're actually trying to do is trade what everybody else's reaction function is.
Yeah.
That's what markets are about. And, everybody puts their own spin on this. So we've got a fascinating setup going into the election now. What's interesting is the market has taken the biggest bet in all history on reflation. Mm-hmm. So we had the shortest everybody's ever been of the US dollar in speculative positioning terms. The shortest they've ever been by 4 standard deviations in 30-year treasury bonds, because they thought inflation, fiscal stimulus, the blue wave. Yeah. And also the longest positioning in the commodity markets. Now, oil just got taken out and shot. And the dollar's starting to get taken, the short position, the dollars are getting taken out and shot. And you can see this narrative. Now, the election, people say, well, the blue wave means X. It's almost always wrong. It's either buy the rumor, sell the fact, so in which case you fade the whole thing. But think the process through. The election, let's say it is a blue wave. Let's say it's unprecedented, amazing, the biggest blue wave ever. So what happens? Nothing until January.
Right.
No stimulus, and you've got to deal with the realities of insolvency. The restaurant around the corner that closes, your business that closes, stuff like that, that's spreading across Europe. That's the reality. And we can deal with the fiscal stimulus in January or February. And let's also think about that. This stimulus in the US should have been passed in September. So we're papering over the cracks from the summer. This is not forward-looking fiscal stimulus considering where we are in the world now. So we're going to be far behind in fiscal stimulus terms. So that's the risk I see. There's also other risks that people have been pointing out, which I think is really important, is that what happens if the polls are wrong? and let's say the Senate is red and the House is blue. Well, then you've got a real problem, because then you've got nothing that's going to get passed and a complete warfare between the two sides. Well, that's a really, really ugly situation the market has not priced in whatsoever. Is that going to happen? I have no idea. Is it a blue wave? Looks like it, but we don't know. And nobody's thinking about the risks here. And the risks all seem to be tilted against that reflation trade that everybody jumped into.
Yeah, that's exactly right. A couple of the things that you've said jumped out at me. I'm also curious, one of the things that you've been very eloquent about, and we probably have people joining us here for the first time during this live broadcast, you've talked about the risks that happen from a balance sheet perspective. The idea that we can watch these flows gyrate from day to day or week to week, but fundamentally what we're seeing is a deterioration of the balance sheets of businesses, of the balance sheet.
Yeah, so give it in terms, I'll give it in two terms. Firstly, at an individual level. So your costs are X and your income is Y. Your income needs to be above costs. If not, you need to borrow money, and that's generally how the world has worked. Everyone's borrowed a bit too much money, right, and that raises your costs. Now, if you lose your job, or let's say you're a freelancer and you've got less work because of the economic situation and COVID, well, suddenly your income doesn't meet your costs and you start to deplete your savings. And if that situation goes on, most people can ride it out for a little bit. There was some government payments that helped, but after a while, you end up running out of money. And that becomes an insolvency. You can't pay your bills. The same is happening with restaurants and the small shops around the corner and the retail and commercial real estate in New York and real estate in general, where they've rented it out in cities. We're also seeing it in big companies, giant companies, people like General Electric with huge amounts of debts and an old business model. They're claiming they're going to be cash flow positive for a while, but if they're not, what happens if their forecast of the economy is wrong? Well, then they're going to have a problem with their debts.
Yeah.
So that's the solvency issue here. And we've got it amplified because all the foreigners with $13 trillion in physical dollars that they've borrowed. Now, if the world is slow, then they can't pay. So there's a lot of people that need income. And in an environment like this, cash flows have been depleted and lower. And that creates the insolvency.
Yeah. And precisely to that point, to add another wrinkle, we've had a national ban on evictions since that's scheduled to expire in January. There are also a series of state and local measures that are set to expire in January. And I think there are many people who don't realize that renters, in many cases, are on the hook for the back rent that they were granted forbearance for during the eviction, during the eviction/foreclosure moratorium.
Yeah, I mean, forbearance is a pause in payments. Yeah. It is not an extinguishing of payments saying, well, let's call it quits, because the landlord needs to pay his mortgage.
Yeah.
So the banks have to forgive the landlord. It is not an easy situation to run for an extended period. So people did it quickly. The governments did it quickly thinking, okay, let's just paper over the cracks right now. We'll figure it out later. Problem is this is going to go on longer than the governments, the central banks, businesses, and the markets expected. And that's the issue here.
Yeah. Well, again, for people who aren't familiar, who may be joining us for the first time, talk a little bit about your framework for what this reaction function is, how we think about processing information as it comes in, how markets respond, and then ultimately what happens in the real economy in the wake of such a crisis.
Well, markets are human behavioral instruments. So the real issue is not just the human behavior of the markets, but most of these instruments like equities tend to be very behaviorally driven because there's no real anchor for equity prices, especially with zero interest rates. Pricing models don't work. So they get driven by emotion. And that's what we saw in a lot of this is emotion. Bonds tend to be more anchored in reality because they're basically priced as GDP plus inflation. So they've been stable and have been saying, listen, the equity market, maybe it's not doing the right thing. So it's that reaction function of market participants that's really interesting. And some of these move like equities, more in a more volatile manner. Bonds tend to be like that because they're anchored to the economy. So as the markets went through that peak reflation hope, everything's going to be fine, we're going back to growth, the human emotion side drives up those assets that are driven by emotion. The problem is, it's Wile E. Coyote. If the economy doesn't do what they thought it was going to do because they're projecting into the future in their expectations, and Wile E. Coyote, as he runs off the end of the cliff, suddenly realizes there's no road left. And it feels like we're in a bit of a Wile E. Coyote right now. And again, I'm actually not short equity markets. I'm short some sectors, some banks, and I'm also short in Spain, but I'm not short the equity market because I don't really like trading equity market tops. Is this the top? I don't know. It feels that way. But, you know, I'm more interested in some of the other markets where I have a much stronger view, such as the dollar, and obviously the other big view that I've got that I think everyone's now aware of is Bitcoin.
Yeah. Yeah, interesting week in Bitcoin. Obviously, prices rising, haven't been hit today. It's really an interesting longer-term story if we forget about the day-to-day gyrations of the price. Over 13.5 right now, as we are live. There's a very durable case here as both a call option on the future and also as a reserve asset, which is something, as you pointed out, we've never seen before.
No, and also, you know, I've been bleating on about it on Twitter and elsewhere and in the Real Vision Daily Briefing that I think that people who are expecting Bitcoin to remain correlated to equities and the dollar were wrong. As I said last week, it's a Bayesian distribution, and that means it has factors that influence its price that shift around. So it's like bonds don't really have that. It's kind of the economy plus CPI with a bit of speculative positioning and a bit of flows. But Bitcoin, it shifts around. And I said, listen, the narrative is, look, if let's say this is a larger top, let's say this is the insolvency phase. Who knows, right? But let's say that it is. What is the reaction function of central banks and governments? We know. Christine Lagarde's just told us we need to do more quickly. And the Fed will do more. So all we know is that there's going to be more printing of fiat currency, more fiscal stimulus, more on the central bank balance sheets. So anytime this happens, Bitcoin does decouple. It might get knocked a few days by flows, and Bitcoin will go up and down as well, you know, for other factors. But overall, it has to be a voting mechanism on what the central banks are going to do. That's its function here. And then, if you think about it in a larger philosophical context, its function is also to price in the probability of a future financial system. And again, we talked about this last week in the daily briefing, is the central bank digital currencies are moving that way. You know, I think the Bank of Thailand announced that they are launching something and they've taken some partnerships. So it's coming fast. I mean, the news flow every day is somebody else being involved in this space. Yeah. So the digitization of money is happening. And Bitcoin is your call option on that, plus a whole bunch of other things. So its function in this is to say, well, if the debt cycle is getting bigger and the central banks are printing more money, yes, that's bad for fiat currency overall because it's debasing it, but it's also bad for the financial system because how are the European banks going to get bailed out? How is this going to happen? What does it mean for the banking system? Could they be nationalized? Well, Bitcoin needs to price some probability of that. And so it rises. So it has a very, very unique function here that even gold doesn't have. So that's why it outperforms gold. Now, I wrote a long tweet thread and wrote about this in Global Macro Investor. Bitcoin is basically eating the world. When you look at any major asset priced in Bitcoin terms, they're all falling. So Bitcoin is outperforming the equity market, the NASDAQ, the commodity markets, gold itself, the dollar. It's outperforming everything. I mean, there is no other asset, and they're all breaking down on the charts. I mean, every single one is breaking down. And things like the banks are all-time low in Bitcoin terms. Yeah. So it's telling you Bitcoin is the super narrative that's sucking in everything else. I called it the supermassive black hole because the more it outperforms other assets, and again today, Bitcoin's up 1.3%, 1.2%, and almost everything else got trashed.
Yeah.
Bitcoin's up 90% year to date. So I'm looking through the assets. The best in the US in sectors, stuff like that, is gold, which is up 30%. I mean, nothing is close to what it's doing. So what that does is it attracts incremental more capital as people seek the highest returning asset. And because the narrative, the story, the economic backdrop is so powerful, the future flow of funds as new people come into the space and discover it is so powerful that I think it's going to dwarf the returns of any other asset class next year. And I think it's going to shock people because people don't quite expect it because they thought 2017 was a bubble. This time, we're going to see massive participation from institutions as well as retail, using it as their life raft out of the system and a call option on the future financial system. For that, it's amazing.
Yeah, it's exactly at the intersection point of three critical narratives, which are globalization, financialization, and software eating the world.
Exactly right. Exactly right. Now, the caveat is it's a volatile asset.
Yeah.
So, it's no reserve asset in terms of the dollar, which has a volatility, against most of the major crosses of like 6. I mean, this thing is a very volatile asset. So you have to be careful with it because it does have 30 and 40% drawdowns, even in strong bull markets. Yes. So it's not one for the faint-hearted. You have to know what you're risking. Think of it as a call. So think, can I stomach it falling 40% in 2 weeks and then reversing and going back to the highs and then tripling in a month? That's what Bitcoin does. Yeah. So it is not an easy asset. It's not one to get over your ski tips in. You need to understand the risk that you're taking. Understand, okay, I'm going to hold this. I don't think you should trade it. I know some people trade it very successfully, but I think the problem is that the future expected returns from here to there are very high. I think 10, 25, 50x over the next 5 years. So that's a huge upside. I mean, no other asset has the potential to do that. Nothing. Bonds, equities, real estate, commodities, none of them. So you've got this incredibly lopsided risk reward with this big downside risk that comes very sharp corrections and stuff like that. To trade it is difficult because you buy it, you sell out, the damn thing goes up again, and now you don't have it, and then you can't buy it again because it keeps going up every day. It's not an asset to trade unless you really know what you're doing. And I just find it easier to buy and hold and then forget about it. Try and check it once a day at best.
Yes, but it also talks to many of the points that we talk about on Real Vision, which is asset allocation, risk tolerance, understanding multiple time horizons, position sizing, all of these things that are so core and fundamental to the idea of how people think about investment.
Yes, exactly right. And, we spend a lot of time at Real Vision trying to educate people, and we're rolling out more and more educational content. Yeah. Because it's crucial, and I've seen from the interactions on Twitter and the comment section, people are desperate for some help. Is how do I size this? How do I think about it? How do I build a portfolio? Yeah. I mean, most people think of a portfolio as a bunch of uncorrelated single bets. Well, guess what? It doesn't work that way. Most things get correlated just when you don't want them to, and it hurts more than you expect. And particularly if you're ever using any leverage, people start using futures contracts or whatever, then you can get yourself in a really big mess. So understanding portfolio construction, understanding correlation but not relying on it to help you when things go wrong, understanding how to use stop losses if that's how you operate, understanding how much to allocate in each trade. We're spending a lot more time on Real Vision getting people to understand how they do this part, because that's the difference. It's hard enough trying to find the investment ideas.
Right.
But then to implement them and not get your ass handed to you, that's a different matter as well.
Yeah, and now more than ever, if we look at today, stock prices falling, yields rising on U.S. Treasuries, prices falling.
Exactly. I mean, I'm actually a bit puzzled by the bond market. But I think we get through the election, and I think bond yields collapse for all of the reasons I've talked about: the slow economic growth, buy the rumor, sell the fact. And the fact is that somebody like me, who's a macro guy, I have a view that yields are going low over time. I think yields go to zero across much of the curve, as they are everywhere else in the world. There's no reason why the US should be the special child. So I'm biased that way. I have been for a long time. I have a good understanding of the bond market. Not that I'm always right, but I'm more right than wrong in bonds over time. And I look at this and think, okay, I've got something to shoot against. which is the fact that people are record short. So if the market's record short, if they don't get this perfectly right, which is the blue wave with a massive fiscal stimulus and oh my God, if they don't get that, bond yields are going to collapse. And they've collapsed in Europe. Bunds collapsed. Why is the US doing differently? Yes, there's some flows from the Treasury issuance. I understand that. And then there's this election thing. So I get super excited when I see disconnects. This is exactly the same trade that we had in Eurodollars about a year and a half ago when I saw that exact setup. Record ever short position in Eurodollars. Everybody thought economic growth was going to be big. Everybody thought more rate rises. And I saw the reality, which was the opposite was about to happen. The business cycle was going to contract. And as I said, that was 18 months ago, and started leaning into the bond market and buying Eurodollars, which are short-term interest rate futures. And that was an absolute home run. And I feel like it's setting up again. There's no guarantee. Past returns are not a guarantee of future returns. But I'm usually pretty good at the bond market.
Yeah. And one thing that's probably also reasonable to suggest is the 60-40 allocation rule of thumb is not the inviolate bit of portfolio planning that it used to be.
No, but bonds still do act like cash, right? So they still, if equities rise and fall and bonds don't do anything, they act like cash. So they're not the worst, but they don't do the opposite to each other in bad events, which used to be a very profitable game. Yeah. The all-weather funds, stuff like this. This was all based around that idea. But once you get to zero interest rates, everything starts to change. Now, I do think they go negative. I think the US, 2 years, 5 years, and maybe to 10 years will go negative over time. But it's not going to offset anything that happens in the equity market if there's a bad event in the equity market. So it is complicated. So people are starting to look at gold as part of a 60-40 portfolio allocation. There are other ways of doing it, but the world gets a bit riskier. And if bonds don't work very well in a sell-off, it forces asset managers to sell more equities to balance the volatility of their portfolios. So again, it creates different dynamics in the market that people need to be aware of.
Yeah. And I should add, in addition to subscribing to Real Vision Daily Briefing on YouTube, we're going to do some live questions in a few minutes here. So please drop them into the chat if you have any questions for Raoul and me to answer.
Yeah, look forward to that. Always good for some questions. And I know there must be a lot on people's minds, and I've made a ridiculous amount of media coverage in the last 2 weeks. So I'm sure there's a lot of questions from some of the stuff I've been talking about. So happy to answer some of that too.
Yeah, in fact, here's one that's coming in right now from Ramon. If you could elaborate on how you think BTC performs under an MMT policy framework.
Look, I think it performs well because MMT allows significant monetary printing. The idea behind it is that it doesn't matter. My argument has always been it may not matter because central banks keep putting this stuff, the lending on their own balance sheets, but what matters is the currency markets, and most MMT doesn't take into account currency markets. So I think you end up debasing your own currency. Everybody's doing it at the same time. We've seen the IMF talking about this Bretton Woods idea, and that what they're really talking about is everybody can print money at the same time to try, maybe everybody can shift their entire balance sheet by 25% in one go. That's MMT, really, because it's for fiscal stimulus. So I think under that environment, Bitcoin will do extremely well.
Yeah. Lots of questions coming in on the macro side as well. Hong is interested in knowing if TLT is still a good buy in your view. TLT is the iShares 20-plus year Treasury bond ETF.
Yeah, I own some call options on the TLT. I own the March 170 calls. I quite like that because I've got limited risk. So maybe Raoul is the idiot and he got the bond market wrong. Well, I don't make much risk there and I can get some levered returns because if I'm right and 10-year bond yields go to zero, it's roughly 20 years. But if I'm right that kind of magnitude of yield fall we get, then this thing's going to 200. So great risk reward.
Yeah.
And I wrote about that in Macro Insiders, actually. It was one of my trade ideas.
Yeah. A lot of overlap between Macro Insiders, of course, and Real Vision subscribers. Here's one coming to us from Michael. This is an amusing one, Raoul. So if you had a gun to your head to rate in order of attractiveness, Bitcoin, Ethereum, gold miners, and 30-year bonds / zero coupons.
If I had to choose one, it's Bitcoin. There can only be one. It is Highlander. There can only be one. So it is Bitcoin. Ethereum it's outpaced it for a while, and I'm long Ethereum, but Bitcoin is the super narrative, and Ethereum is the beta narrative around it. It can move more because it's more volatile, it can outperform, but Bitcoin is where I'd want my money. But I like all of those trades.
Yeah.
I like Ethereum, I like gold miners. We've had some fantastic gold mining content on the platform. Kirill Sokolov talking through his whole thesis, and Kirill's amazing. And then Tom Kaplan and Rick Rule, two gold legends, talking about gold miners. I mean, they're pounding the table on how cheap these are, the free cash flows these things generate, and the massive kind of 10, 20x upside you can get out of gold miners. So for those of you who don't like cryptocurrency, but you want to get that kind of, asset class re-rating, maybe that's the opportunity.
Here's one from JJ that kind of asks you about your Wile E. Coyote scenario, which is, without stimulus for so long, effectively, why hasn't the S&P fallen out of bed?
Hope. Because the idea was stimulus is coming, stimulus is coming. Remember the narrative amongst the politicians? Stimulus is coming. So the market's like, yeah, it's coming, it's coming, it's coming. They didn't realize they'd walked off the edge of the cliff like Wile E. Coyote. That's the point.
Yeah. Here's one coming to us from Connor. What are your thoughts about uranium and natural gas as two outside contenders in current market setup?
I mean, natural gas is up 51% this year. I don't know. I don't like trading that gas. It's too volatile for me. It's a widowmaker trade. So it's not one I'm focused on. Uranium is starting to do well. I was in that trade for a while. I get the thesis. I understand the nuclear power industry. I understand the depleted reserves. I understand, the shutdowns and what that means for new supply. It's a good story. It's not mine. Every time I get into a slightly more micro theme like uranium, without massive rise in nuclear power stations, big macro thematic, I tend to get it wrong. And I got it wrong in that. I was stuck in it for a while, and then I got bored out of the trade in the end. But I don't think it's a bad thesis. But I also note that there's a lot of retail investors buy that thesis. It's like the cannabis thesis and the gold miners thesis. So you need to be careful whether it's a retail trap or a real opportunity.
Yeah. Here's an interesting question from Josh. With the higher dollar narrative, what's its impact on Bitcoin?
So is Bitcoin correlated or not? Now, obviously, if the dollar falls and Bitcoin is denominated in dollars, that's how we think of it. So the price of whatever it is now, 13,639, that's dollars. So if the dollar falls, the price of Bitcoin goes up in dollar terms. So if the dollar's falling, then Bitcoin has a supercharged backdrop. But it doesn't have to. And I argued this a while ago with gold. So for the last 3 years, gold and the dollar have been rising. And I've been telling people that this is going to happen. And I think Bitcoin and the dollar can rise too. And I think, just to be clear, because everybody asks me this maybe 20 times a day on every single, on Twitter every day and in the comment section on Real Vision, Bitcoin and gold will work in deflation as well as inflation.
Yeah.
The reason being is we understand the inflation case. The deflation case is the only answer to deflation at zero rates is negative rates and more monetary printing. And that is bullish for both. So they have to price that in. So they've got a smile on them. Inflation, deflation. Anything in the middle is terrible for gold and Bitcoin. But anything on the outer side, incredibly powerful. So deflation is extremely positive Bitcoin, maybe even more than inflation, because I think that the outsized monetary response from deflation, considering it's the sum of all fears for the central banks. If they feared that the most, and we're seeing it in Europe as inflation has turned negative, they will press the monetary accelerator as hard as they can. And the reason being, just so everybody is clear, is debt plus deflation is a ticket to bankruptcy. And it's the insolvency issues in a deflationary world that they're terrified over.
Yeah. Tons of questions, Raoul, about Bitcoin and crypto. Not surprisingly, we were obviously very interested in this space, and we were vowing that we weren't going to make this a referendum on cryptocurrency. But the questions are coming in, and these are the questions that people really want the answers to. Hamza effectively asks an inflection of the last question about the correlation between Bitcoin and the U.S. dollar. He's asking about Bitcoin correlation and U.S. equity markets. We've covered that a little bit here. What do you think about it, Raoul, though, in terms of time horizons, short-term, intermediate term,
So
and long-term?
short-term, it will correlate to various things over time. One minute Bitcoin will be correlated to gold, next minute it'll be correlated to something else. Over the longer-term time horizon, look at the charts, they're not correlated. It's as simple as that. So just chill. If you're a holder, then just hold it. Stop worrying about it.
Yeah, hardest thing to do sometimes, Raoul, is nothing.
Exactly. It's the best thing to do mostly.
Yeah. Here's one coming to us from Akram on the macro side, which is basically, does the insolvency phase cause another liquidation crash like in March?
Look, it can start that way. It can come in fits and bursts, but generally the steepness of the decline is less. So it doesn't go in a lightning bolt. It tends to go down, up, and then slower down. There are periods of time where there's panicky risks, and there's periods of time where it chops sideways, bounces up, all of that. So it's a mix.
Here's a fun one from Russell. If Satoshi's 1 million Bitcoin started selling, would it change your position?
No, but amusing, right? At some point, if this thing continues to go up, he's going to be the richest man in the world.
Yeah, richest man, woman, group, unknown.
It's probably the U.S. government who owns it.
That raises a series of other questions, doesn't it?
It does. I've always thought that the Satoshi white paper written in that transatlantic English, it just felt like it was always, and again, I have no idea, and this sounds ridiculous, but I've always thought it was like a mix between MI, kind of MI6, well, not MI6, but the cryptography groups in the United Kingdom, and also with in the US as well. It feels like a state created it and floated it, but maybe not. Who knows?
It's always fun to speculate a bit about because it sounds like the plot of the next Bond film.
Yeah, exactly. Exactly right.
Here's a question coming to us from Randy. Once again,
it does have the elements of a religion about it, right? Somebody comes down from the mountain with the tablets and leaves them, and everyone, it's such a great narrative. Regardless whether you like it or not, it's a bloody powerful narrative in how it forms and therefore how it affected so many people. Because like a religion, people think it's going to bring change that they want and need. And so people start building it and preaching on it. It starts building a congregation. It's an extraordinary movement, really amazing.
Well, if this was written as a novel in 2007 or 2008 and someone told you, Raoul, you have to read this is the most amazing plot, you'd have gotten to about page 10 and told your friend, no, come on, this isn't realistic.
What, they're going to build a religion around money? Yep, they are.
Yeah. When my good friend Alex Rass, who's been on the platform, was at Goldman at the time, I believe, came to me in 2010, maybe early 2011 with Bitcoin. I spent about an hour on the phone telling him all the reasons why, of course, it could never work. And he was a very smart technology guy, but he just didn't understand markets.
Exactly.
Here's another question about Bitcoin. GBTC as a proxy for Bitcoin. Any thoughts on that?
Look, it's an easy access product. Problem is it's closed-end fund, so it trades at a premium and a discount.
Yep.
So it's currently trading at a premium, and then should the Bitcoin price reverse for a while, it tends to trade at a discount, so you can get sharper losses than you would have done. But the ease of use makes it easy. So I don't know. It's fine. I'd rather just own Bitcoin. If you can't, okay. There's one that trades in Germany, an ETF on Bitcoin that's tradable as well, so that's doable. There's also Bitcoin futures that trade. So there's a number of ways of getting access if you don't want to own Bitcoin or don't want to have a bearer asset.
Yeah, and talking of the religious aspect of it, if you post that you hold GBTC, people will yell at you, not your keys, not your coins.
Yeah, exactly right. It's the same with gold, right? Paper gold versus physical. It's the same argument.
Yeah. So here's a question that comes to us on the macro front from Paul. What's your view on value stocks? And this types into a bigger narrative, the growth versus value narrative that we've been talking about for so long on Real Vision.
I think the only way value is going to catch up with growth is if growth collapses in terms of the share price. The reason being is, and we've talked about this a lot on Real Vision, the flow of funds are structurally against a closing of that gap. Because the largest and richest demographic on earth, the baby boomers, who own all of these active funds, because that's what they grew up with. They grew up with the Peter Lynches of this world, one up on Wall Street. What they've got is active strategies, which many of those are value, and they're all retiring. So they're selling it all. And we're not talking about a bit of market liquidity here. We're talking about in the US alone, 76 million people selling down their share portfolios to buy bonds over time as they retire. And that's just creating this ridiculously wide spread. Eventually it will change, but I don't see it changing for a long time. The other side of the equation is interesting to me, is what is driving growth. Part of it is market sentiment, the hope trade, but the other part is 401k inflows from the millennials. So they've been putting money into these, and it's been driving passive investments. So it's creating this bifurcated market. So I'm not sure that value without a catalyst has much chance yet of catching up on an absolute basis. On a relative basis, for sure.
Yeah. Raoul, in the last hour or so, we've covered a lot of different areas, lots of moving parts. How do we tie it all together? What's the big picture that you're thinking about as we close here today?
Yes. Realize that we are walking into a 3-month period of risk. That doesn't mean markets collapse, but understand the risks you have. You have explosive virus growth, Europe shutting down economies, you have problems with solvencies in many of the places. You've got problems in the European banking sector. You've got excess speculation in the US stock market. You've got nothing coming from the US in terms of stimulus, probably until Jan or Feb, once you've got a new government in. So, because it looks highly unlikely Trump's going to win. Obviously, if he remains, then he might get stimulus earlier, but he still needs to pass it. And it's really difficult. So just understand that we are at best, leaping over a crevasse, at worst, walking down a hill. And just the best thing to do when you're walking down a hill is just do not trip over.
Yeah. So Raoul, final thoughts. What are you going to be looking for to know the directionality? What are the key inflection points that you've got your eye on?
Yeah, I think the dollar and the stock market are great indicators. I'm sorry, I'm looking sideways because I'm looking at my Bloomberg. I'm looking at the euro. If it breaks 116, then that GMI crash pattern has formed, and I think we can see some upside acceleration in the dollar, downside acceleration in the euro. I think we're going to see that. I think the equity market has similar. I don't know what the level is in the S&P. Let me just bring it up. The level in the S&P is almost where it closed. So I think if we break 3,200, let's call it that. If we break 3,200, then it's confirming that this could be a more dangerous pattern. Again, there's no guarantees. I don't want to trade it. The other part of this equation is I want to see the bond market confirm this, because I don't believe anything until the bond market tells me it, because the bond market is the truth. And the reason people say, what does he mean when he says that? I've explained it before on the Real Vision Daily Briefing. The truth is because it is anchored in economic reality and not market speculation.
Yeah.
Economic reality, we should see bond yields come lower. So that's going to be a key signal. When bonds tell us it's the go, it's the go. And then I'm just watching Bitcoin.
Yeah. Well, the one thing there is a certainty about, Raoul, is now officially the weekend.
Thank God for that. And the sun is shining, so I get some vitamin D.
Indeed. Everyone, have a good weekend. Pour yourself a glass of wine. See you next week.
Yeah, thanks, everyone. I hope you enjoyed it. And don't forget, if you want to see this every day, and it's an amazing show, I think it's the world's best financial news and analysis show, just click on the YouTube button as well. Sorry for those of you who are watching at Real Vision, but we're trying to message 2 people at the same time. But if you are watching on YouTube, just subscribe to the channel because it is amazing.
Yes,
thanks, so much. Have a great weekend.
On YouTube and on the Real Vision platform. Thanks for joining us, everyone.